Rohit Srivastava is ready with us as well. He's fund manager with Sher Khan. Rohit, good morning. Good to have you with us here. So, globally, not just India, but globally, last couple of days, China is shut now. But even in China, when it was trading, we've started to see a bit of a turn, right? I mean, risk assets are rallying, equities, etc. Commodity currencies are stable; they're not falling off as they were. Are things really turning? And this is the turning point, or this is just a rebound in a broad sort of sell-off?
I think it will be a rebound. We did see a lot of selling, especially in Europe. So I think most of last week markets were down, but China was not down. So I think the focus shifted away from China, and now that they are on a long holiday, there won't be any new news from there, at least for the rest of the week. But my sense is China still has downside. When I look at the Chinese stock market, I don't think they are ready for a rebound. But the rest of the world seems to be. What happened is that the Indian index hit the 75-50 mark in the first week of September itself, and after that we've not been able to go below that. And last week we held the 77.20 mark, which is around a 61% retracement of that initial rally that we saw. But the rest of the world had actually not fallen below the August lows that they made, and that they have done now. If you look at the DAX, the European markets, or you look at some individual US indices like the NYC Composite, they fell below the August lows only in the last week of September. So there was some lead lag, I think, between what happened in India and what happened in the US and European markets. But now I think all of them are poised to do some kind of a rebound. I wouldn't call this a trend reversal, but I would call it a good rebound that can last for a couple of weeks. So probably it's an indication that October could end up being a good month for equities after what has been probably a bad 2 months or an entire quarter for the equity market. So at least for this month, I think we would be on the positive side of the trade from 77.20 onwards. We've been looking at the potential that the market would retest the 80-50 mark and probably go past it. And my sense is 82.50 is an achievable target, and we'll see whether we get there or whether we can even move higher. But 8050 would be the initial hurdle. Once we get past that, I think 81.50, 82.50 is what we'll start looking at immediately.
And we should do that pretty soon, you think?
Yeah, I think most of this should happen in October. I think give it a maximum of up to a 5 to 6 weeks is what counter trend moves take. And if I go from the bottom of 75.50, we already done for 3 weeks. So this is the 4th week on. So even if I give it another 2 weeks, that is sufficient. But because world markets are just starting to pull back, maybe it can stretch to the end of October. So I would give it the rest of the month. If anything turns early on, if we move fast, then probably we'll look at an early turn in India because we bottomed earlier. But the positive momentum might just hold on for a little longer if world markets also join in, which looks a little likely to me right now.
And then, so for example, if we get to about 82.50 or so, then after that what? The downtrend resumes?
Yeah, I'm not sure whether we stop at 82.50. There are a couple of reasons why it can stretch a little more. But yes, the downtrend would eventually resume, whether it stops at 82.50 or goes higher than that. So I'm not trying to put a level at which it will stop simply because we've had almost, I think, 6 months of a decline in the Nifty, and we've had 9 months of a decline in the Bank Nifty. So the chances are that we might not just be rebounding for the sell-off that we've seen from May, but maybe for the entire last 6 months. It's not perfectly clear if that's the case. If that is the case, then then the upside could be more than even I'm thinking right now. So I'm open to upside targets, but I'm still calling this a rebound. I'm not calling this a trend reversal, but a slightly bigger rebound than what we've seen before. So the momentum might look pretty good, and since you've actually seen a pullback by end of September, I think most of the selling in stocks that were still weak appears to be done. So it will be pretty broad-based rise. By the end of it, I'm sure a lot of people will call it the resumption of the bull market, but my sense is it won't be the case.
And this is true for the globe as well, which may actually which has just started, right? I mean, where many markets have just started to return last 48 hours or so.
Yes, that's right.
Okay, fair enough. So, in this kind of a scenario, what do you think people who have the gumption to, because this could be meaningful, right? At least 250, and you're saying it could exceed, right? Even that. What should one do?
Yes, so it's a meaningful trade. We are looking at it as a trade. Investors who have a 1 month kind of trading horizon, they also look at buying deliveries for near-term trades. Whether you're trading deliveries or whether you're trading options and futures, that varies. There are the number of stocks that are really making new highs, like you see a Maruti, or probably you see in some of the tech stocks. That's a very narrow list. I think that narrow list is where the performance would continue. But it's the weak ones that will probably give you those fast rebounds. But essentially, you look at it as a trade that you need to get into and get out of at some point of time. But you trail it as far as you can, because like I said, if I can't put a pin on what the upside would be, the right way we use is something known as a trailing reversal that you use to determine whether the trend has changed. And as long as it has not, you just try to ride it, which is essentially trend following as far as you can.
Okay, fair enough. Rohit, we'll leave it there. Thank you very much. Great speaking with you. Quick conversation today, but useful as always. Have a good extended weekend.